Kind of help us make sense here of kind of the wind down of 2021 and what we're sort of looking forward to in 2022.
Yeah, so the wind down has been a fourth quarter filled with change. I mean, really starting with the earnings season of the third quarter kicking off in October, we started to get a lot more signals that 2022 may be a little bit more difficult than 2021. Recall, starting this year, analysts were expecting about $170 in earnings for the year. We're likely to get about $200 in earnings, so incredible earnings beats throughout the first half of this year. Really started to slow down a lot in the third quarter, and companies started to guide us to expect a little bit tougher times come the fourth quarter. I think that's going to likely be the story for 2022. Slightly tougher times. Not all stocks are going to rise together. Everything will no longer be 100% correlated. We're going to have to do a little bit more homework in terms of investing, pick our spots pretty carefully going into 2022, as this rising tide is no longer going to lift all boats. We will have winners and losers emerge in the year. Different asset classes are likely to perform much better than others, and it's not going to be one-sided story anymore of recovery as we move into expansion. The economy's still intact. We're still going to see growth in the year ahead, but we're not going to see this rip-roaring recovery continue into the year.
All right. So given that backdrop, Gina, I mean, I'm an investor just likes to buy the S&P 500 ETF and just sit back and count my winnings. But if I have to get a little bit more selective this year, what are the sectors that you suggest I take a look at?
Yeah, I think it's going to be a really interesting year for sector as well as factor strategy. On the sector scorecard that we run for the U.S. Large cap market, it suggests that sectors like energy as well as tech and financials are best positioned. That's a little bit of an odd combination, particularly compared to the last 2 years, which has really been more about the super cyclical value trade running everything, the return to normal type of trade, as if you will. Low valuation stocks ripping higher at first, and then the cyclical story really carrying on through most of 2021. It becomes a little bit more mixed into 2022. Defense is still toward the bottom of the scorecard, but starting to creep their way higher, as it's, again, not really a one-sided market as this has been for much of the last 2 years.
Got to get your thoughts here on some of the other risk assets. Of course, the biggest of them all right now, at least in this past year, has been Bitcoin, with a big headline coming across the wire just a little while ago. It's below 48,000. I mean, we should point out we started the year, I think, below 26,000. I'm curious, when you look at some of the technical levels and some of the action that we've seen in pricing in Bitcoin and some of the other cryptocurrencies here, do you actually see this as concern right now?
You know, in terms of broader risk assets, we have been in an environment where Bitcoin and equities have moved together. So even if you were to look at correlations across assets, it's not just the rising tide lifted all boats in the stock market, but really the rising tide of risk tolerance lifted all risk assets together. Crypto as well as equities and any risk asset pretty much rallied over the course of the last 2 years. I do think that you can throw crypto right into that thesis that going into 2022, maybe not all of these boats are going to continue to rise. Maybe we do have an environment where correlations generally start to fall, dispersion starts to rise. Bitcoin is one of many cryptocurrencies, just like Apple is one of many stock options in the market. And as this market becomes more investable, you would expect to see a little bit of dispersion, a little bit of correlation decline, and maybe Bitcoin may or may not be the winner. I think that we are starting, there's a lot of competition in crypto, just like there are a lot of competition in equities. And as risk tolerance sort of moves in more fits and starts, as opposed to all risk assets do well, you would expect winners and losers to emerge.